If you own a business, you've almost certainly come across the term all-risk insurance. And it sounds incredible, doesn't it? It sounds like a completely bulletproof shield for your property. But what does it actually mean? Well, today, we're going to pull back the curtain and unpack that promise.
So this is the million-dollar question we're tackling. When a policy is called all risk, does that really mean everything is covered, no matter what? I mean, the name makes this huge promise, but the reality, well, the reality is always buried in the details. All right, here's a quick look at where we're headed. First, we'll break down that all-risk promise. Then we'll dive into the most important part, the fine print and what's excluded. After that, we'll talk about how you can customize your coverage, and finally, what you need to do when disaster actually strikes. Okay, let's jump right in. What is the big deal with the all-risk promise anyway? What makes it so attractive to business owners? Well, it all comes down to how it's structured, which kind of flips the whole idea of insurance on its head.
Here's the core concept, and it's super important to get this. Instead of giving you a long list of things that are covered, an all-risk policy starts from the opposite direction. It basically says, we cover everything except for the things on this specific list. This means the most powerful and important part of your policy is actually the list of exclusions. And that leads us perfectly into the most critical part of this entire discussion, the exclusions. This is where the rubber meets the road. This is where that big, bold, all-risk promise gets a reality check. Honestly, understanding these exclusions is the only way to know what protection you truly have. The first group of things your policy kicks out, well, they make a lot of sense when you think about it. These are events that are so widespread, so massive, that no single insurance company on Earth could possibly afford to pay all the claims. They're just fundamentally uninsurable.
We're talking about huge, often human-caused disasters. Things like war, terrorism, a nuclear incident, or even if the government itself seizes or destroys your property. These are standard exclusions pretty much everywhere in the industry because the potential losses are just too astronomical to calculate. Next up, you've got the major natural disasters, what a lot of people call acts of God. So things like earthquakes, massive storms, and floods are typically not included in the basic policy. But, and this is super important, take a look at that note at the bottom. Unlike war, you can often buy coverage back for these events. We are definitely coming back to that in a minute. Now, the next category of exclusions is about a completely different kind of problem. You see, your policy is designed for sudden and accidental events. Think of it like a 911 call for your property, not a long-term maintenance plan. And that's exactly why it excludes damage that happens slowly over time or is because of some flaw in the property itself.
So stuff like simple wear and tear, rust, mold, or damage from pests, that's on you. Same goes for problems caused by a bad design in the first place. And check out that last one, mysterious disappearance. If a piece of equipment just vanishes and you can't prove it was stolen, your policy probably won't cover it.
And finally, there are just some types of property that this policy was never meant to cover in the first place. Things like vehicles, cars, planes, trains. They all need their own specific type of insurance. The land itself isn't covered, neither are growing crops or livestock, and of course, financial things like cash and stock certificates are out too. Okay, I know what you might be thinking. After hearing that long list of exclusions, it can sound a bit scary, right? But hang on, don't worry. This is where you, the business owner, get to take the wheel. This is how you can build the policy you actually need, using things called extensions. So, what are these extensions? Just think of them as optional modules you can plug into your main policy. They're specifically designed to fill those gaps we just talked about. They let you buy back coverage for some of those excluded risks, so you can tailor the whole thing to what your business actually faces day to day. Remember those acts of God we mentioned? Earthquakes, storms, floods? Well, this is how you fight back. The natural damages extension is hands down one of the most important add-ons you can get. Seriously, if your business is located anywhere that could see a flood, a major storm, or even an earthquake, you absolutely need to look into this. And listen, it's not just about putting the walls back up. After a disaster, there are all these other costs that can totally blindside you. That's what other extensions are for. They cover things you might not even think about, like the insane cost of hauling away debris, paying architects to design a new building, recovering your lost computer data, and even the bill from a fire department. All right, now for the nitty-gritty, the part that really matters. What happens when that worst-case scenario becomes a reality, and you actually have to use this thing? Let's walk through the concepts you absolutely have to know when it's time to file a claim. Okay, if you remember one single thing from this entire explainer, make it this. the concept of underinsurance. It is a huge deal. It's what happens when the amount you've insured your property for is less than what it would actually cost to replace it right now, today. And believe me, this can turn into a financial nightmare. And here's why it is so incredibly dangerous. It isn't just about a total loss, like your whole building burning down. As this slide shows, if you're 20% underinsured, your insurer will only pay 80% of any claim you make. So that $50,000 claim for some roof damage, boom, you're only getting $40,000 back. It's a penalty that applies across the board to every single claim. It's also vital to know your policy has two main parts. Section 1 is the property insurance. That's for your physical stuff, the building, your machinery, your inventory. But Section 2 is business interruption. That's for the money you lose because you can't open your doors. It's what helps pay salaries and covers lost profits while you're getting. If the worst happens, what do? Well, the process is pretty straightforward, but you have to follow it to the letter. First, notify your insurer immediately. Don't wait. Then, you've got to submit the formal claim on their official form. Provide all the documents and proof they ask for, and this is key. You have a duty to take reasonable steps to stop the damage from getting any worse. So after all this, what's the big takeaway? The bottom line is this. An insurance policy isn't just a document you sign and file away in a drawer. It's an active tool. And when you take the time to truly understand the fine print, the exclusions, the extensions, that's when you transform that piece of paper into a real, powerful shield for your business. Which really leaves us with one final thought. The most important question isn't, do you have insurance? It's, do you have the right insurance? So take another look at your policy. Really look at it. Are the exclusions what you thought they were? Do your extensions actually match your real-world risks? Are you insured for what it would cost to rebuild today? Because the time to find that out is right now, not after a disaster strikes.